please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. As promised, let's get some commentary going from the Havells management. The company reported an all-round beat in the fourth quarter. The earnings were led by the cables and the consumer durables businesses. Anil Rai Gupta, CMD of Havells India, is now joining in. Good morning and thank you for joining in, Mr. Gupta. First up, can you break down the fourth quarter numbers for us? It did look like that almost all segments were firing this time around.
Well, most of the businesses have done well. The switchgear business has also grown, especially after the first half, where there was a disruption because of the GST transition. But now the second half has augured well. The fourth quarter has done well. We've started exporting switchgear as well as a part of our supply contract with Hyundai. Even in the consumer durable business, we witnessed a good growth in this quarter, about 19% on an adjusted basis, on a higher growth. So most of the businesses, including lighting, cables and wires, have shown decent growth in this particular quarter.
Good morning, Mr. Gupta. You particularly mentioned that switchgear business after the slowdown has done well. Can you say it's troughed out? Has demand picked up from the real estate industry now?
Well, I still feel that the real estate improvement which we want to see in the country has not yet come, and because we are mostly into domestic circuit protection, we would like to see a further improvement in the real estate sector. I think structural changes have been made. It might take some time for the real benefits to start coming in. So I think we're still very hopeful about all businesses. We are hopeful about the switchgear business also. Let's see how it goes in the coming quarters.
Anil, good morning. So the operating margins at 14.1%, market expected 12.7%. But is this number sustainable?
Well, we've seen this performance improving over the last 3 or 4 quarters, and the whole idea is that how we utilize the strength of our brand channel, and obviously focus a lot on cost controls. So, we are quite hopeful that these kind of margins, or at least in the range, should be achievable in the future as well.
Okay, so what would that range be? Say closer to 15%? Is it possible?
Well, I think if we take out Lloyd, overall Havells has been in this range. It has been improving a little bit, but except a few, let's say, disruptive quarters, most of the quarters have shown similar margins, and we hope that we can continue with the same.
Okay, Mr. Gupta, now then let's come to the balance sheet. How much cash are you sitting on at the end of the fiscal, and how do you plan to use it? Any payouts planned to shareholders?
Well, during the year, a sizable part of the cash got utilized in the acquisition of Lloyd. Of course, even after that, there is a healthy cash on the balance sheet. Also, in the future, in the coming year, most of the Capex will be used most of the cash will be used for Capex. This year, we have close to about 500 crores of Capex because of a new manufacturing facility coming up. Generally speaking, our Capex is in the range of 150 to 200 crores in a year.
What is this new facility? Can you give us a little more color on what is this Capex?
Well, this facility is a completely new facility for manufacturing of air conditioners. In the past, Lloyd has been dependent on outsourced production, but now over the next few years, we'll be focusing more and more for in-house production.
And when will it come on board? With in-house production, should we assume that margins will improve?
Yeah, overall, first of all, we expect this facility to start production next year. And yes, of course, when we have our own manufacturing, we'll have a better control on costs as well as availability. I think apart from just margins, we also need to focus upon the requirement of the working capital, because when you have your own manufacturing, you have better control on the working capital and inventories possibility, and a better product offering to the consumer as well.
How big are your exports right now, and what's the target, and what kind of geographies are you targeting?
Well, overall, our exports is right now only about 5 to 6% of sales. We we definitely see in the next 2 to 3 years we want to take it up to at least 10%. Most of the countries that we are associated with are Middle East and Africa. That's a sizable part. The SAARC countries and the Southeast Asian countries.
Okay, just a word on your consumer durables business, sir. There's been a lot of unseasonal rain, thunderstorm, etc. All this activity so far in the first quarter in the north. Could that impact your performance in Q1?
I think overall the fan season is doing well. We still need to look at, because air conditioners is pretty much dependent upon the onset of summer. I think we are still in the midst of summer. Let's see. Let's discuss this after the quarter closes.
You bet we are in the midst of summer, Mr. Gupta. Well, all I'm looking for is a range. Do you think the 15 to 20% growth rate in consumer durables can continue?
Well, we are quite hopeful of a good growth in this year.
All right, we'll leave it at that, sir. Thank you very much, Anil Rai Gupta, for joining us with details on the Havells numbers.
Just a word on pharma stocks today. I mean, some of them were at 52-week lows, but all of a sudden there's quite a bit of buying that you're seeing on a lot of these names like Ajanta Pharma. Just pull out Wokart's, Wokart's intraday charts. So a lot of these stocks are doing well. Ashwini Gujral, Mitesh Thakkar and Prakash Kaba back with us. Ashwini, thoughts on first hour of trade and your stock calls?
Well, today is a bit of a short covering type day, so all sorts of pharma stocks, NBFCs, the housing NBFCs, Canfin Home, etc., they are moving up. As we speak, United Spirits is moving up. It's had 7-8 down sessions, so that is also well positioned for some sort of upside. So those are the kind of stocks you look for today. I don't think the large cap indices are really looking for a large move today. So getting into the pharma sector, agri, those sort of stocks would be the order of the day. Having said that, Sun TV we were chasing, I think still more upside. This is now a positional trade which is working out. So that is a buy with a stop of 930, target of 1000. Escorts has moved up strongly. That's a buy with a stop of 940, target of 975. And Canfin Home, after many days of decline, that's now turning around. Trading rally may not be a trend change, but that's a buy with a stop of 386, target of 402.
Okay, all right. Mitesh, let's get your views in as well. How do you look at the trade so far? And of course, trading ideas?
Yeah, so nothing much on the indices. We were long on Friday, and I think the only good thing which you can do possibly is keep trading a stop loss on the Nifty. Coming back, I think Sun TV is on my list as well, and I think very clearly I have got both these stocks when we have got result reaction, Tata Global and Sun TV. Both have given what I would call as gap breakout in case of Sun TV and gap breakdown in case of Tata Global. Both these stocks have moved from the levels when I mailed the recommendation, but Sun TV, I think any intraday dip could be bought into. Closer to about 955, 960, buy with a stop below 930, 1010 should be your first target. Though I agree with Ashwini, I think eventually we'll see much higher in positional levels. Tata Global also around 274 would be a good shot. It's come off more from there, but in case we get an intraday rebound, 273, 274 should be a shorting point. Keep a stop at 281 and look for 263 as the first target.
Okay, let's get Prakash's trades in as well.
Well, 10,800 seems to be a strong support zone to work with. As long as that hold, upside could be on. Two stocks I have, I'd go with the banks. Kotak Mahindra Banks looks good to me. Good target on the upside is around 1290, 1300 zones. Stop below 1260 should be okay. And I also like the PSU Bank, State Bank of India. Some kind of a sideways move with an upward nudge. This nudge could continue up to levels closer to 255. Stop below 248.
Okay, just look at intraday chart of some of these pharma names. Once again, I just want to go back to that. Sun Pharma's intraday chart, keep in mind this was down about 3-4% on Friday. Dr. Reddy's, Lupin, and if you take a look at mid-cap pharma stocks, Granules, Ajanta Pharma, so perhaps, a big negative has not materialized, which the market was fearing on Friday, and that could be the reason some of these stocks are surging. Ashwini, thoughts on Sun Pharma?
See, again, these are trading rallies, so I don't think things have bottomed out. So any sort of 20-25 point move should be used to sell into Sun Pharma and in general pharma stocks.
Is there a slightly longer bet in the metal stocks? Mitesh, JSPL for one.
In fact, the ferrous names look slightly better placed than the rest of the pack. Tata Steel, I think, and JSPL are the two stocks which interest me. JSPL, I think, if you look at the charts, needs to start getting past the levels of 264, 265, where we have seen last 3-4 intraday rallies end, and we are very close to that level. So maybe about 265, we'll look at a target of around 280, 285 over here. Similarly, Tata Steel also, if it starts getting past 615, 617 levels, I think there could be a mild breakout and we could see some rally to about 640 odd zones.
Okay, gentlemen, thank you very much for joining us. Actually, Mitesh, our commodities editor, Manisha Gupta, had warned us to expect a good metals day, and it is shaping up to be that way. There's not always a one-to-one correspondence between the metal price and the stock price, but this one is working. Okay, the market is finding a lot of short covering candidates as well. Canara Bank again continues, as Anuj was pointing out, now up 1.6% after those numbers. So a lot of them are seeing short covering, probably because much of those bad news was in the price, was anticipated, widely anticipated after that February circular. Well, let's now look at the earnings day forward. The biggest of them, the Mindspace, is going to be dominated by Hindustan Unilever. HUL is reporting numbers. Let me straight away go to Mangalam and check out what are the big numbers to watch out for, Mangalam. As always, volume.
Absolutely, Lata. Watch out for the volumes. But this time, the stock has seen a stellar rally like it has over the last few quarters as well, up 80% from the start of 2017. So we'll have to bear that in mind before actually digging into the numbers. But volume growth, 6 to 8% is what the street expects. Remember, last quarter, they posted an 11% volume growth that came on a favorable base. And the Unilever parent company, when they released their first quarter CY18 numbers, they said that India had seen a broad-based volume growth across categories. So 6 to 8% is the sacrosanct range that we are watching out for. Apart from that, watch out for the EBITDA margins. That is likely to improve by about 120 basis points on account of some GST offsets, some cost control measures, as well as the product mix laid out by the company. And finally, qualitatively, watch out for management commentary on rural growth, what they say of the new product launches, as well as input prices, given the rally that we've seen in crude. So that said, broader numbers that we're watching out for from the reported set, 8.3% revenue growth, 8,900 crores is the number that we're looking at, 21.3% EBITDA margins, as well as a net profit growth of closer to 15%. The number that we're watching out for is around 1,350 crores.
Okay. All right, Mangalam, thanks very much for that. So lever is the big one to watch out for today. On that note, let's move on to the world of commodities, find out how the initial morning trends are looking like. Manisha is joining in with all the action. Good morning, Manisha.
Morning, and thank you so much for that. Well, remember, we have started this week with slight weakness in the crude oil prices, and that's exactly what's been mirrored in the Indian markets here. So more than 1% of decline on your screens is what you can see. While, of course, there are concerns on how the Iran reimposing sanctions, US reimposing sanctions will work out really, but it is about the increase in US production. The oil rigs have been increasing, and speculators have been cutting their long positions on crude, and that clearly is weighing that space there. The gold and silver prices in the meanwhile have been quite mixed. We seem to be holding around that $13, $20 per ounce in the global markets. The noises about the interest rate hike in US seem to be slightly, slowing down. And we have seen the US dollar take a bit of a pause in from that rally. And that has been supportive for the gold and silver prices. Flat to weak moves is what we are seeing in the Indian markets there. The rupee movement, of course, is also into calculation here. The base metal prices in the meanwhile have been trading mixed. We have seen the iron ore and the steel prices continue to gain up. The inventories have been declining. The construction demand is picking up. The economic data from China has been positive. All of that supportive. Copper in the previous week did see a gain of around 2%. We have seen very flat opening coming in for that one, but the strength continues in case of the aluminum prices. Should take a look at the steel ingredients as well, because we did see the nickel and zinc prices decline in the previous week. Nickel, of course, has picked up because of the gains in steel prices. Zinc still continues to languish a bit, as we see in the opening trades there. But trading strategies, and we have them from Anand Rathi, who has a sell call actually coming in for the gold and crude prices there. In case of gold prices, they expect the prices to continue to decline slightly more. 31,350 is the target coming in for that. For the crude oil prices, the lower side targets are at around 4,720. It's a buy, though, coming in for the base metal prices from them. And copper is their pick with upside targets of 470 on that.
Okay.
All right. Thanks, Manisha, very much for giving us those updates. That's the commodity cues for you. By the way, that news on your screens, we're going to get you more perspective on that. It is the promoter, Blackstone, that has sold a part of its stake, 8%. The sale that happened today is Blackstone. That's what our colleague Nisha tells us. More details and perspective coming up on that in just a bit. Right now, a quick break. Also coming up next, Abhay Firodia, CMD of Force Motors, joins in to talk about their latest order win. Stay tuned. Welcome back. So as promised, let's get you some more details on exactly this deal that's taken place with Mphasis. We have Nitin Rakesh, Executive Director and CEO of the company with us. Nitin, good morning. Thanks for joining in. So it seems that promoters have sold 8% of their equity. What's the rationale? Is it just monetizing an investment? What's the thought process behind this?
A position from the Blackstone folks that talks about the transaction. I think the idea was to create more liquidity in the stock, and still continue to retain a controlling position. And from that perspective, I think nothing much changes from my point of view and the management's point of view. We still have a strong partnership. We'll continue to work very closely with all our shareholders. I'm very excited we got such good, high quality news. So from that perspective, that's how we are thinking about it.
Okay. No, Nitin, if that is the theory, then there can be more sales. Will there be? That would be the biggest worry.
Look, I think they've very clearly said that that they don't intend to sell anymore because their global, positioning always is to have control positions, and so I don't think that theory is going to play out.
Can you confirm the number? They were holding 60.38 as of March 31st. So with this 8%, is it 52% now that they hold?
Yeah, I think you can do the math. It's only 8% stake sale, so they own about 52.4%.
And can you confirm the identity of the buyers as well? We understand it's Oppenheimer, Tiro Price.
I cannot. You'll have to wait.
Okay. No, we have names like Aberdeen, Tiro, and Oppenheimer. So it looks.
Wait for the disclosures to come.
Okay. So you can confirm that they are not looking to sell any further.
That is, I'm going as per the statements that have been released by them, and I think I saw them on your channel also. So my sense is, that this continues to be our position as well.
All right. We'll leave it at that, Nitin Rakesh. Thank you very much for joining us with those details. So statements now public that this was to create liquidity and they don't intend to sell further. So Blackstone still remains the promoter owner of Mphasis with 52% stake. Well, Nisha Poddar actually broke the story for us in terms of the owners, in terms of the transaction itself. She joins in, and so does Rima in a bit. Nisha, tell us all that you picked up.
That's right, Lata. It's a large transaction, 8% stake sale by Blackstone, which had invested a couple of years back in Mphasis. It still owns the control, 52% stake remains with Blackstone, but they had also made a hefty profit out of this particular stake sale because they invested in the company at 430 or 460 rupees per share in two tranches, and now they have sold at 960 rupees per share. So it's a hefty return, but of course it's just a part stake sale. Some of the large FII
Nisha,
names have really come in as well.
Yeah, Nisha, do you have any idea as to how much those three companies have bought? Aberdeen, Oppenheimer and Tiro, and whether it's only these three or whether it's a large number and these are the prominent guys?
So these are the top three investors out of a large bouquet of financial investors who have invested in Mphasis by way of the stake sale. We don't have the exact details because books are just getting tabulated, but these are the three big names which have come in. We'll get you more details as and when it returns.
Okay, all right. Let me just also quickly throw this to Rima, because Rima, the last couple of years have been very good for this company. From the journey of getting away from HP as the parent, reducing that side of the business, and the stock has had a phenomenal run, right?
Yes, absolutely. In fact, just last week, it hit that 1,000 rupee mark as well. As you rightly pointed out, the company is reporting good numbers. For the last 4 quarters, there was a revenue beat. One of the few companies which reported double-digit growth in FY18 in constant currency terms. And as Nisha was pointed out, Blackstone has already made a very hefty return. They bought stake from HP at a price of 430. They made an open offer to acquire 26% stake at 457, which failed. So basically, their purchase price was close closer to 430. So on that, they've made a direct return of 120%. But not just that, Blackstone, like most of the other private equity firms, when they invest in a company, they've also been taking money out via dividends. So just in the last, I think in September 2016, the company paid a dividend of 20 rupees. In March 2017, there was a dividend of 17 rupees. So straight away, you've got 37 rupees multiplied by the number of shares they hold. That was additional money that Blackstone has already taken out, which reduces its purchase price. Then on top of that, Mphasis had also done a buyback of about 1,100 crore rupees. So the direct return that Blackstone has made is 120%, but the indirect return, if you add the dividend as well as the buyback, is a lot more. So clearly, they've got this bet absolutely right.
Okay, well, you bet they have. Thank you very much, Rima, for that perspective. I would assume now that they are just about 51%, 52% promoters, any further sale will be, if at all, to strategic investors. I mean, they will want to sell, if at all. After all, that's what financial investors are for.
Role of private equity,
to book profit at some point. But then they would do it, they would give control premium, and then the sale will be for a much heftier price if and when they do. So the Mphasis stock is actually recovering after Nitin Rakesh came and said that it was only to create liquidity in the stock. Well, Mphasis now up about 0.5% after the clarification that this will not mean more sales by Blackstone. On the other hand, it was more to create liquidity. We take a break. When we come back, we're going to focus on earnings again. The management of Graphite India will join us.